Hey everybody, JJ here. It's December 2nd, 2020. This is BX4. Important update today. We've got a lot of news to cover. The economic myth that there is a V-shaped recovery is being exposed. Also, we see the unemployment benefits are below poverty level, so people that are getting these benefits are not getting enough to be considered not in poverty. They're below the poverty line in many states. We're going to talk about those states. We're going to talk about the US dollar. It's under pressure, and we're going to talk about credit card interest rates and a lot more. Let's begin. First of all, please hit that subscribe button and notification bell. A lot of people are still telling me that they're not getting notified and that they're not subscribed for some reason. A lot of weird glitches happening lately. Let's start right here. The US dollar trading at a 2.5-year low. Well, is this any surprise to anyone with the level of debt and money printing that has been taking place? Now, I don't put a lot of weight behind this US dollar index. It's an official statistic that's widely cited, so we do talk about it. And what it is, it's basically a measure of the US currency against a basket of 6 major other rivals of currency. The problem is all those other rivals, those basket or that basket of these currencies is also fiat currencies, which guess what? They can create unlimited amounts out of thin air at the push of a mouse button. Right? So comparing the US dollar to a bunch of other bad, fake fiat currencies is not the best thing to do in my opinion, but we still look at it. The best thing to do is just look at your purchasing power. Look at what your dollar buys today. Look at the cost of living, the inflation, the home prices, energy prices. Right? The cost of everything, nearly everything, are rising. There are some things that are dropping, like the cost of suits. The cost of suits are dropping because less people are going into offices and more people working at home, so now suits are a little bit cheaper. It's supply and demand. But the unlimited printing of currency out of thin air is bad for savers, and it can be good for speculators, people that go out and speculate on the market rising and home prices rising, and that type of risk investment, can pay off if you know what the game is, and the game is inflation so far. Let's talk about this next. Nice article, Wall Street Journal. A V-shaped recovery doesn't mean a V-shaped jobs market. So now the truth is starting to come out. So now more and more articles are coming out here. Manufacturing is leading the bounce back in economic activity, but the recovery in the service sector will mean everything to the labor market. And what they're talking about here is global manufacturing. There is somewhat of a rebound. But guess what? The U.S., we're a fraction of manufacturing for the globe, and we're about 70% service sector, so very little manufacturing here in the U.S. All right, and you don't have to look very far. We don't have to look very far at all to see the true picture. We see jobless claims, not much of recovery there. We saw an uptick last week. Tomorrow, we're going to see the new jobless filings, and I'm sure it's going to be another awful number, likely above 700,000 new jobless filings. Of course, we're going to report on that, but people are not recovering. The markets, they may be doing well. The mega corporations, multinationals, they're likely doing well. They are doing well. Most of them. There actually are some that are having some trouble. But we're talking about the big mega corporations. Most of them are doing better than ever. Right? Domination is their business, and business is good. And they have the help from the government, who can impose all these regulations and licensing restrictions on smaller businesses. They can deploy all these new requirements and distancing guidelines that a lot of smaller businesses may not have an easy time complying with. Just like the video we showed in our previous report about the small business owner being harassed by the police, asking to look at his license. And it's a few month old video, but it's still relevant today as we see a lot of states, including my state here in California, our state's going into lockdown 2.0, and it's causing another big surge in small business struggling to survive, basically. All right. Speaking of government assistance and people needing a handout, unemployment benefits fell below the poverty line in 13 states. All right. So these people lost their job. They filed for unemployment, yet they're still below the poverty line. But yet people still think that the government needs to step up and do more, and people are calling for universal basic income. So basically you're asking for a failed institution, the government, to come in and do more when even what they're doing now is not the correct solution. It's not enough. And it's not that it's not enough in the fact that they need to hand out more money. It's the fact that they're not addressing the underlying problem. The underlying problem is, right, this entire monetary system. It's a system of inflation. It's a system where a small group of people get to pick winners and losers, but yet somehow people think that expanding the government and giving the government more power and more responsibility is somehow going to be the solution. The government doesn't hand out enough unemployment benefits in 13 states to put people out of poverty, and you think this same government is going to be the solution. All right, people are struggling, and what happens when people struggle and they get desperate? They'll take any sort of benefit, any sort of assistance that they can. When people cannot feed their family and they're put in that desperate situation, they just want what it takes to get them a meal that day. They just want what it takes to keep a roof over their head for the time being, and nobody looks at the big picture when you're in a desperate, dire situation. And I think that's what a lot of Americans are in right now. And could that be the reason why we don't get as much benefits to the people that need it as we should? All right. Now let me be clear. I don't think benefits and handouts are the solution at all. I'm just saying that the government is using that to keep people asking for more assistance and to create this illusion that the government is the solution. All right, but here's the real solution. No handouts, no printing money out of thin air, no endless money creation, no bureaucrats picking winners and losers. The solution is sound money. All right, and when people hear that, they say, oh, JJ, we're never going to go back to a metals-based currency. It doesn't even have to be that extreme. All it has to be is checks and balances. For example, banks should not be able to lend out money they don't have. Right? The government should not be backing loans, because when the government backs loans, then there's no incentive to drop prices, because if the government's going to back it with an unlimited printing press, what is the incentive for, let's say, the cost of education to go down? Right? The universities, they're just going to keep on raising their prices because they know it's government-backed loans. They're going to pay for it. And we see the government involved in a lot of sectors right now. They're involved in housing, of course, education. All right? It's everywhere. It's everywhere. And it's inflation on top of inflation on top of inflation. It's going to be more poverty. The top 10% will continue to be enriched, while people are going to be buried under debt for most of their lives. Let's talk about credit card interest rates. We know a lot of people rely on credit cards just to get by. The average interest rate just was updated yesterday, December 1st, 19.24% on credit cards. And this was just put out by Investopedia. So imagine not paying off your credit card each month and having to pay nearly 20% in interest. That's insane, right? Well, a lot of people are doing it. And even if you have excellent credit, 800 credit score and even higher, the lowest you'll get is out of Discover here. It says 11.99%, so about 12% is the lowest. But some of these major credit card issuers are giving out rates as high as nearly 25.5%. All right, so once you're in debt and you cannot pay off your credit card balance in full each month, it's going to be very difficult for you to ever get out of debt. All right, more and more people are living at home now for the first time ever. Most young adults live at home and are not independent. So maybe if they don't have to pay rent, maybe they can pay off their credit cards. That's one of the only positive things I can think about as far as what's happening right now with the average U.S. Consumer. All right, but folks, I've got an important announcement, and I think most of you know this by now. This system is going to see major changes in the next 6 months. I think a lot of things are going to happen this month that are going to give you a hint of things to come. But I see a major, and I haven't said this in many years, over the past several years, and most of you know that have been here, I've been saying the market's going to go up, the stock market's going to be propped up. That is going to be changing in the next 6 months, in my opinion. A lot of big things. Keep your eyes out on the news this month, and on this channel this month, we're going to show you these things as they unfold, these events. We'll be covering them, but in the next 6 months, I expect a major market correction. And we touched on it a little bit in our previous video. I said December will be shocking, but we're going to talk more about it. That's all for today. Thanks everybody for being here. Stay well, stay safe, stay prepared. Bye for now. Peace.